So I heard you want to learn more about the VA benefit. This is the best and easiest explanation of what it is, what it does, how it works, and all the most common questions and misconceptions I've heard over the past 14 years as a loan officer, closing and helping over 4,000 veterans find the home of their dreams without going broke in the process. That's what today's video is all about. If you're new here, my name is Katie Rose and I help real veterans just like you navigate the VA loan benefit better than anyone else. If you'd like more information beyond what we talk about in this video, be sure to subscribe and visit my website, homewithkatierose.com, for more. Most people don't believe me when I say this, but only 13% of veterans have ever actually used the VA loan benefit that they've earned. Not because they don't qualify or because they did something wrong, but because nobody has ever walked them through what it does, how it works, and what the advantages are. And so they've missed out on the one thing that this benefit has that makes it an absolute cheat code for veterans that regular civilians don't have access to: the zero down payment. But what does all that mean? And more importantly, what does it cost? A veteran can come to the closing table and not pay a thing towards the down payment every single time, as long as the benefit is active. But let me be clear, even though there is no down payment, there are still two other pieces you need to be aware of: closing costs and funding fee. So many veterans get tripped up right here. So let me be clear. Your down payment for the home and your closing costs are two different things. So even a zero down VA loan, you still have to pay closing costs. That's for things like the title fees, the property taxes, the home insurance. These are things everyone has to pay for when they purchase a home. You can negotiate with the seller to cover these costs, but this is where a great real estate agent earns their commission. To get those closing costs paid for on, let's say, a $200,000 house, the closing costs may run about $6,000, but that number is negotiable. Not always, every deal is different, but you should definitely ask. If it works out, now you've got a zero down payment and you've got the seller paying for the closing costs. It sounds like a weird loophole, but I promise you, this is the VA loan doing exactly what it's supposed to do: saving you money. Now, I also mentioned the funding fee, right? Some veterans have to pay for this and others don't. But what is it really? It's a small payment added to your home loan that keeps the VA loan funded so that the next veteran can use it. It doesn't come out of your pocket at closing, but if you had, let's say, a $200,000 home loan and you don't have to pay a down payment, you're looking at around $4,300 or 2.15% added to the $200,000 total loan. However, some veterans get this fee waived completely. 10, 20, 50, 100%, the funding fee is covered completely. You do not have to pay it. I've talked to veterans who have earned 10% rating for years, and nobody told them that it wiped out the funding fee entirely. But this poses another interesting question. What can you actually buy with your VA loan? Because most people assume it's a single family house like we've been mentioning, and that's it. But there's really only one rule about the home that you can buy with the VA loan. The home you buy has to be your primary residence. You have to live there. Practically speaking, let's say you buy a duplex. You can live in one unit, rent out the other. Your tenant's rent will help cover your mortgage. Again, zero down payment. But another thing that's super important to know is you must live in the home within about 60 days of closing and plan to stay there. Now, there is an exception. If your orders change and you're PCSing, there are workarounds. This benefit doesn't punish you for serving. It's designed for those who serve. And the best part, most veterans believe that they can only use their VA loan once, but that is not true. You can use it again and again and again. The VA loan literally has no limit on how many times you can use it, if you know how. Let me show you. The concept you need to understand is something called entitlement. Entitlement is how much money you can borrow at once under a VA loan. Entitlement has nothing to do with how many times you use the benefit, meaning when you sell the home or you pay off the loan, your entitlement, your money comes back. Your money literally refills and you can keep using the benefit every time you buy a home for the rest of your life. So here's how that looks in real life. And this is the part that I wish more veterans understood. If you buy a single family home and live in it a couple years until your family grows and you need more space, you need a bigger house, you can use your VA loan again to buy your new house, and then don't sell your old house and keep it to use it as a rental. Now you have two VA loans running at the same time, a primary residence and a rental property. Both would be purchased with a zero down payment. But if you've used your loan once, how much money is left in your entitlement for the second home? It depends on your remaining entitlement. It depends on what county you live in and your income. So it wouldn't be fair to give a blanket answer. The point is, it's possible. Veterans can build real income from rentals, build equity and generational wealth. That's another huge common misconception, and it's such a hot topic right now. So I'm here to make it clear. Yes, VA loans are assumable. That means someone else can take over your VA loan, same balance, same rate, same terms, they step directly into your loan. The reason why this is such a big deal right now is because there are veterans that are still sitting on a 2.5% and a 3% interest rate. And what buyer wouldn't want that kind of a deal, right? But here's what no one is saying. If someone is selling their house and they owe $210,000 and they sell the home for $300,000, you as the buyer would still owe $90,000 in cash. The difference between the loan and the purchase price doesn't just disappear. It comes out of your pocket. It's important to keep in mind too that you would also go through their servicer to assume their loan. You can't pick your own lender, and you still have to qualify with whatever lender they were using before. VA loans are one of the few loan types that are assumable. So when the numbers line up, it's an extremely powerful move. When they don't, it can cost way more than the veteran realizes, which I'm so excited to get to in later videos, so be sure to subscribe, don't miss it, and if you have any other questions, drop it in the comments below.